What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TSLA for Tesla Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the stock regularly here on the channel. The main thing I want to point out from the daily perspective is that we are breaking the resistance trendline sideways through time. We got a little bit of a fake break up and over this area of resistance on today's session. However, it wasn't really enough of a move for me to consider that a fake out. For now, we're just building the case that any firmer break up and over 943 does start to bring into play more buyers, I would imagine at least, into that 1,000 level. Now, today's candlestick structure isn't exactly promising with that upper wick and the weaker close down towards the lows, but it's not like we're dramatically underneath the balance area that we're in. I would just start to classify that as this square right here, roughly 900 being the line in the sand. Sure, there's a little bit more wiggle room, the Thursday and Friday lows, but ideally, in a perfect world, it would hold up above 900 on this pullback here. So that's the daily perspective. From the 30-minute, you can see this same exact concept right here. We have this area of balance. We've been playing ping pong back and forth. Looked like it wanted to go this morning, never got the 30-minute candle close outside of the level that we had mapped out. So we'll be patient. We'll wait. If it does happen, we know that 1,000 is the number overhead. If we break out to the downside, right, that does start to become a little bit more concerning. It puts a lot of pressure on those two-day lows, as we pointed out from the daily from last Thursday and Friday. That number is at 881. Like, that's the last line of defense. Otherwise, I feel like we're coming back down into 800 here, just noting that the structure on the way up was fairly poor. It was basically a straight shot higher, right? And generally speaking, those areas of charts can be retraced fairly easily, right? So 800 is really the next big thing to contend with if this double bottom from here around 881 starts to break down into the remainder of this upcoming week. So for now, it still is in the balance area here. We're going to be patient. We're going to wait for a break in one direction or another. If you're a short-term intraday trader, you're going to look to buy at the bottom, sell at the top, maybe buy some puts at the top, sell at the bottom. You get the gist, back and forth until more of a directional move is produced, up and over the highs 943 or down and out under the lows at roughly 881.50 as we discussed earlier. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.